Good evening. Good evening. Good to see everybody. Good evening. And welcome to Evening Markets. I'm Coach Tim of Advanced Kingdom TV, and glad to be on. Good evening. And we're going to jump right into it. Good evening. Glad to see everyone. Yeah. Well, let's get into it. Good evening. Come on in and say good evening as you're coming on. We got some stuff that we're looking at. So, Father, we thank you for tonight, that the right spirit will be in us, that we would move in the spirit of excellence, something that would glorify your name, that we would do things that would glorify your name tonight. We ask for your presence here tonight, that it would reside over this session and cause us to be profitable. In the name of Jesus, we thank you for this and give your name the praise, honor, and glory. In Jesus' name, amen. All right, well, let's jump into it. We are here for another night of Evening Markets. I showed the disclaimer that what we're getting ready to do as we launch into the markets is not financial advice. You're going to enter at your own risk. We're going to explore a lot. We're going to do a lot. If you see me take a trade tonight, it will be at your own risk if you decide to jump in with me. And yeah, let's have some fun tonight. Get some charting time in. Good evening, Corey. Evening, Dr. Lakeisha. Good evening, Judy. Paula, good evening. Brian, good evening. What did you say? You start looking at the 10-year note? Yeah, we're going to look at that tonight. Back testing, but I think I might have found my new friend. That 10-year treasury note, that T-note is interesting. We'll talk about it tonight. Good evening, Kamika. All right. Well, we're here for Evening Markets. Remember, this is not a signal group. We are here to learn and grow together. Let's jump into this trade. I'm going to enter a sell in on this Nikkei trade. I got two here. And we've been doing some charting on this previously. We're going to go over some of this analysis of why we're taking the trade right now and what the risk is on this. All right. So, where should we start? Let's do a top-down analysis as we always do, and we're going to put the stop. So we think we got a double top here. We possibly could have a double top here. So we're going to enter in a sale on the 8 o'clock candle. Yeah, we're going to go over that 10-year because it is an definitely interesting, even if you've never traded. It's something that we want to pay attention to and have possibly part of our repertoire. All right, using big words, repertoire and all that kind of stuff. All right, where are we at in space, in time? All right, so we've been doing charting time. We're gonna keep rehearsing our eye until we're able to see the charts very clearly. We're gonna come in, do an analysis. It's gonna be the same analysis every time that we come in, and we want to repeat it over and over again so that we can become professionals at charting. That's what we do. We're going to cut our teeth at charting. We know how to do it. We know when to do it. It should be always the same, like free throws in basketball. We're going to practice until we get it right. All right. Okay. So let's do our top down analysis. We're going to start from the month. We already know what it is. So But for those that are new, that's just seeing us chart, they're like, well, how do you chart? Well, I'm going to show you. Good evening. Tisha's in the building. I still think Nikkei is going to go up. Yeah, I do too. But I'll tell you why I entered this trade. All right. Let's do the top-down analysis really quick. Let's jump into it. All right, there we go. All right, so we know what the month is. We know that we had a shark fin on the monthly chart. That shark fin is could be broken. That this pullback could be testing, and then a pullback, and then we could go retest the highs. We understand that. We know that. We believe that price is going to go higher. All right, we're in an uptrend, so we're very bullish. But we see that we're also high, and that we need to retrace. All right, is June the month that we're going to retrace? No, June is going to close out bullish. We should be pulling back on June, or we should be going higher on June. That's just what it looks like. Weekly. All right, this is where we're at with the week. Very bullish candle. We're pushing to the high. We're going to retest these highs. And so are we going to get a double top or at least a zero up here? That's a possibility. That's what it looks like. We rebroke that last time we were on the chart. We rebroke the, not rebroke, but it's a new high that broke the last high. That's what I meant to say. It broke the May high. That's what I meant to say. All right, jumping down to the day. Day is starting to be a shark fin. It's not over the 75 level, but we have broken the band. And so we know that we're due for a retracement right now. So that's where we're at. We've broken this level. We've came up, we hit exhaustion. So now we have a watermark of where we're getting resistance at. All right, we may go up. We retested that just recently. And so that may come back down to retest right now. All right, 15-hour. Well, let's go to the 8-hour. Let's jump because I want to get to this pretty fast of where we're at and the reason why I'm taking the short here based on the retest. All right, so we're on this bullish trend. We retested, we rejected, and had a really nice pullback to this breakout area. So this breakout area was significant. We retested it once, retested it twice. Now we broke through it, came back and retested it, right? And so now we have the second time that we're coming up to the top, and we have a legitimate retest area, retest zone, excuse me. And that is sitting right there. What just happened? Oh, okay. I'm gonna show you what just happened, which I'm not mad at. I am and I am not. So I just reversed that thing, and that's something you have to be careful of when you're trading. I pulled this over here, and let me close out of this, and I'll show you why. All right. I pulled this over and I clicked it. I clicked off of it right here. There is and I'm going to re-enter it back into the sale. There is a reversal button that you have to be careful of. Sometimes you hit that reversal button and it reverses your position. It takes you out of the position that you were in and reverses it. I'm going to enter back into that position here currently, but you got to be careful of when, and let me just show you this. This is not random, but this is educational. If you go to trading, this instant order placement deal, when you check on or off, it doesn't confirm it. It will just put you in position. And then this reverse button, if this is checked, it will reverse the position just by checking it. So make sure that you're careful if you have instant order placement on. So I'm going to get back into that sale, but we're just explaining why. All right, so we quickly got down to the 8-hour. We're going fast through this analysis. We quickly got down to the 8-hour. We have an area that has been tested as resistance. We should be in sales. I wish I was still in that sale, but we're going to get back in it. All right, so 4-hour, we're pushing higher. We know where we're at in space right now. We're pushing higher. And TDI has turned into divergence. All right, so we do want to be mindful of where the MAs are when we see that. that possible targets for when you see a shark fin divergence, possible targets is down to the 4-hour 50. All right, 4-hour 50 is rising, but there's a possibility that this could be a double top and that we could go break this neckline and come down and hit this 4-hour 50 and possibly retest this area down here. Again, all right, so that gives us a tool of projection for us to start to think about possibly where price could be going tonight. And we know that the 8-hour candle could be a reversal candle and that we may see something down in this area. All right, moving pretty fast through this, going down to the hour. Now that we see that, we have another confluence. We have 4-hour regular divergence because it's going against the trend. It's regular, right? So we have regular divergence right now. And then we have a 1-hour shark fin that is forming on this 8-hour candle. 1-hour shark fin that is forming. All right, so that's another confluence that price could potentially be heading down. All right, we're going to skip down the time frames. We have the 45-minute divergence right here that could play down to the 50. We have the, let's go to 30-minute. We have 30-minute divergence. We have 15 minutes. What do we have? 15-minute divergence here, but we are breaking the bands. We are coming up high. So we know that there's going to be reversal. Where is that going to take place? Potentially, it could take place where it retests the highs before. All right. So that is a possibility. Go down the 10-minute. We have divergence. And notice as I step down from the monthly to the weekly to the daily to the 8-hour to the 4-hour, 1-hour, we have confluence. They're all saying the same thing. All right. We step down to the 5-minute. In the 5-minute, we have divergence, right? So now we just had the first pullback. We're pulling back up on the 5-minute and we're retesting this high, right? And so that high is being retested. We're pushing higher than this candle body close. And so now that is what we call the baby divergence. Let me zoom in on this just so you can see what baby divergence looks like. It's a 3-candle pattern, right? And wish this red candle was gone because that would be a better opportunity to see this. But it's a 3-candle pattern on baby divergence. You have the shark fin here, which is this candle. I'm just going to ignore this red candle because it's actually 4 right now. But so we're just going to ignore this. Shark fin here. This is the next candle that produces the low. So let's just treat this as one candle. And then the next candle pushes up and you have divergence and this candle's higher. That is baby divergence, which is gives you a pretty nice signal that the next candle that opens up will probably open up and become the bearish candle that pushes down. All right. And then, so now we're in when we jump down to these lower candles, we're zoomed in because it's candlestick anatomy. All right. 3-minute is saying the same thing. It's divergent. 2-minute divergence. All right. And 1-minute is divergent. So all the candles are saying the same thing, that this is a reversal zone. 30-second is divergent. Look at that. We're pushing higher and these candles are lower. All right. Higher, lower. All right. So we're coming up to this zone here. And let's see if we get the exhaustion right here. Because if so, we may be able to catch this 4-hour divergence down to the 50. If we get the same wick here, it's going to be very cheap. Now, remember that old resistance can turn into support. So if you're in the buys right here, it doesn't mean that you should be closing out right now. This is going to be a very cheap, because it hasn't proven itself yet, but this is going to be a very cheap buy, because if it pushes up higher, we really don't want it. All right, we're not interested. So we can at least catch it down to 0, potentially down to the 5-minute for the retest right here, right? And then it could just keep riding back up, but we could potentially catch it down here, and then potentially it can come down here. That right now is like a 1 to 8. We don't necessarily want are looking for the 1 to 8 or 1 to 4 or a 1 to 3 as a possibility. All right, so we got to see if it's a test. I'm gonna hop into it because I'm kind of sold on having that much confluence on all the time frames that this is going to be a reversal area. This is kind of the area, unless we've done this before. We'll go to a continuous contract so we can get all of the candles there. But looking left, we're up into this area where candles have spiked up, but this has been a reversal area in the past. All right, just looking at this one, looking at that one, it's been a significant area in the past. All right, so we do have that. If you wanted to mark that out as just so that you get warm and fuzzies around it, that's a possibility of saying, hey, this has been an area of reversal in the past. And look at that, we're right there right now, just bucking up against that area. All right, so does that mean it's going to short? No, we're trying to catch a reversal here on the 8 o'clock candle. Is the 8 o'clock candle going to be the candle that reverses? And that's really what we're trying to pay attention to see. It looks like that to me, and it's very cheap to jump into this, and that's why I am getting short on this piece. So hopefully that makes sense to you. It's what, we had a very bullish action up to this point, hit this area, and then we started to trickle off. But so now we have the same bullish action up until this point, and now we're going to see if these candles start to come down. All right, so 1 hour candle has now broken the band. It has now touched, and that's where we're going to enter the sale. All right, so really the same place I entered it last time. And then I want to talk about some other stuff as well. All right, so now what was Dr. Lakeisha talking about when she said it's going to push higher? All right, I think that's a valid point that she has, because when you measure from where price and why there's an argument for the bulls here. When you measure the last pullback, so with fibs, excuse me, let me drink something. And then I'll get to some questions too. I'm not ignoring that, but price is moving, so I want to hit this. Higher highs, higher lows. That's the way structure is moving up. Higher high, higher low. Higher high, higher low. Higher high, higher low. All right, so that's the trend right here. So we should be from this higher. This was the last higher low right here. Right, so this is the last higher low. And so if you're a bull in the market, I could see why. You haven't broken structure. It's constantly printing higher lows, higher low, higher low, higher low. This is really equal higher lows right here, where it double tapped, and then it should push and break that. So I can see that's a big possibility right there. Now, when you look at that last higher low that was put in was right here, or previous low was right there. So this is the last higher low that was put in. So that's really where you want to take your fib from, was the last higher low. That was right here. So we grab that and grab your fib tool, pull it from that last higher low, because structure wasn't broken. And what it's pulling back to is that 78.6. Excuse me. And I kind of want to pull it right here, because on the lower time frames, we want to start on that green candle, because that was just a pullback, and then that next green candle opened. And so that touches the 78.6 perfectly right here on that last low. 78.6 pushes up to what? 23.6. Right? So that's what happened here. Push to 23.6, pull back to 38.2. So that's a part of the Fibonacci pattern. Now we should push up to the target of 40,040, sitting right here, right up above all of these previous
highs. Okay, so I can see why there would be buyers in, because 78.6 pushed to 23.6, pulled back, and now should break the high and go to 27. Let's take profit one. And so if you're a buyer in this market, I could see why you would buy this market. Okay, now here's the thing with Fibonacci and things that you have to remember. Your first take profit is always at 0, the top of it. Why? Because until 0 is broke, this is resistance, right? And so at 0, you could get the pullback that goes back to 23.6 to retest that area, which I guess you could call this here a pullback. If you look at that candle, let me go to a lower candle. Let me see. Yeah, this right here could be a pullback, right? And then we could push higher. So that's the risk here. And if you want to test that risk, if you want to, if you're a seller, if you're a bear in this market, if you want to test that risk, what you can do to offset that risk is lessen your stop loss. Just pull it above. You don't have to risk that much. Just pull it above 0. Because if we break 0, that's a break of the high, and we could come back down to retest, right? This is what I'll say about that. That if you do that, just know that a spike up could be a liquidity grab before the retracement. But let's do that tonight. Let's enter a stop. We're in with 2 contracts, 2 micro contracts, or no, 2 regular contracts. There is no micro contract on Nikkei. And let's just pull that above 0. All right. We'll pull it just above 0, just above this high over here. And so now your risk is very limited. If you're still a bull in the market, then we'll just limit the risk here. All right. All right. So purple dotted line, we are trading above the session open. Whenever you trade above the session open, you do want to be cautious that this doesn't have to reverse here. All right, so you have time to analyze this. Right now, it does look bullish. We did get the pullback here. Now that I'm looking at it, we did get the pullback here. It does look bullish, and we may not exhaust here. And we could squeeze out the shorts. I'm a short in the market right now. We can squeeze out the short just based off of structure, just based off of the retest. This could continue to push, and that 9 o'clock, 10 o'clock candle could be the candle that brings in the sellers. All right. So that's the analysis for Nikkei. And it looks like if you're on the buy side, it looks like we're getting squeezed out on the sell side. Right, 0 is right there. Stop loss is pulled just above 0. Looks like we are going to get a spike. Once these candles open, they really don't wick out too much. Candles push, the 7 o'clock candle. And I hate to do this right now, but I just saw something. Here. Where was it at? What's it? Tuesday. Let me go to the hour candle, because we just saw something here. And if it ends like this, it's something that we got to pay attention to. All right, we're going to leave this alone. Let me get to some questions here. All right. Okay, we'll talk about the 10-year. Yeah, I believe so. Dr. Keisha's comment is right. I'm going to bring this up on the screen because I like this analysis here. This one. I still think Nikkei is going to go up. It may retract to the fib 23 or 38 and then push up. I like that analysis. If that is your analysis, I would take the buy. Like, you can fade what I'm talking about and take the buy. That is a great analysis. What I walked through is the reason why. That pullback here was a pullback down to 23.6. 23.6 was sitting around here. That is a pullback down to that level. And so if you took the buy, I could understand why. All right, why do you say it will go up to the 4-hour 50? Is that a rule? Yeah, that's a rule. Whenever you spot divergence. Now the divergence is counter trend, right? And so counter trend divergence are usually divergence that is regular divergence that pulls back to a 50 MA, wherever you find the divergence. So right now on the hour, it's a shark fin. It's not divergent. On the 4-hour is where the divergence is taking place. Right, so the hour, I wouldn't mark the 50 on the hour because the hour is not divergent. Hour is a shark fin. The 4 hours where it's divergent, and so that's where you want to catch the 50 MA. Right, is right there. Now, as you go down through the time frames, what you'll find is that these are shark fins. But then you catch divergence on lower time frames. So here's a 10-minute regular divergence. And so now it sets a new target that the 10-minute 50 could be the pullback, that it can pull back to the 50 MA. So usually those pull back to the 50. They're counter trend. They're not very predictive, but that's something to keep an eye on. Where else was it? Yeah, the 2-minute. The 2-minute is divergent, so it could pull back to the 2-minute 50. So those are wherever you spot the divergence is the possibility of where the 50 could be. But that is a rule that for regular divergence. Hidden divergence usually is support on the bottom side. So if you spot divergence at the 50, that usually produces a new high. If it's already at the 50. On regular divergence, it pulls to the 50. On hidden divergence, it's usually the 50 that's acting as support or resistance. It's already there. All right, what other questions do we got? Good evening, Priscilla. Kamika, can you repeat again about trading above session open? Yeah, it's really, so this purple dotted line, if you go right click, go to your settings, go to, I think it's scales and lines, scroll down, you'll see previous day close. Right, you see that previous day close? I have it as a line, then I have it as a purple dotted line on my chart, just so it's there, and that's right here. It tells you where the previous day close is. Right, that previous day close is the 0 line, right? And so we talked about this in this morning session. Let me zoom in. Let me zoom out. All right, boom, and then bring this over. All right, so we talked about right now it's at 0.47% change on the session open. 0.47%. That is that measure is coming from the session, the previous day session close, which is the current session, open. That's right here. And so now what this is measuring over here to the right is the percent change from that line. And so when we say it's trading above it, can you really see price coming back to 0%? You know, if it's this far away, do we see this being at 0% when this candle or when the session closes, or do we see that being closer to like 1% or 0.2%? Well, what it's measuring is how close to the line it's measuring, and if the day is going to be bullish or bearish. So if we're trading above the line, you should be looking for buys. If we're trading below the line, you should be looking for sales, right? And so that's the previous day session open. Okay, yeah. So that's that. We're at a critical area. We're at a pivot point right now. We'll let this play out. Stop loss is just above the previous high. Will this become a double top? We have a lot of exhaustion. Prices going back and forth. I wouldn't just keep switching it based on price action. We did the analysis, and so now we're going to let it play out. If it breaks above, then we don't like it too much, right? That confirms that it is bullish. But if we stay below this level, this spike up, then we could potentially have a double top, and that could come down quite a bit. That could come down quite a bit. So let's watch this and see if it comes. That's really the only thing I'm looking at tonight is this Nikkei trade that is on the books right now. All right, so we'll see if how this plays out at this, and I hope this all makes sense to everyone. Do we have a double top? Do we have a M pattern that is setting up? Well, it's yet to be seen. We got a good play in, and really this is our play here. Let me adjust it because this is on the continuous chart, continuous futures chart. We're trading on the September contract, so let me correct it. This is really what we're looking at. Look at that. Look at if you're right here. If I'm wrong, okay, big deal. But if I'm right, this is a 1 to 5 risk reward, and let's just make it a 1 to 4. Let's just take it down to here, which is a retest of this structure. But we're looking at a 1 to 4 as a possibility on this trade, right? And so I really don't care, and I posted this in our advancer group, is that I really don't care about if I'm right or wrong. I'm playing the numbers and letting the numbers work for me. I got a double top. I caught it right here. Stop loss is where the just above the double top. Let me get rid of this. Yeah, let me get rid of that. It's just above this wick here. If it goes up above, it cancels out the order. So I risk very little to gain a lot. All right. Create limit order. Let's just look at this at 2. I'm risking $500 to make $2,400. Right? That to me, in real estate, when I was doing real estate, I'll put it like this. When I was doing real estate, we said we made money on the buy. We made money when we signed the contract, because that tells me how much equity I have in the property, right? And so to me, this green represents equity. This red represents my liability. And so we made money when we went in with the trade. Like that's if you have a lot of these contracts set up with the risk reward like this, you're going to make money just based off of the trade ideas, but just by spotting this trade idea. So the liability on this, or the reward on this, far outweighs the liability that you're carrying. Like I'm carrying $500 in risk, but the reward is $2,400. Like I have to be right. I have to be wrong on this like 8 times in order for me to lose money. If I win money 2 times, it outweighs the last 8 times that I lost on this trade idea. All right. So the odds are working in my favor, right? As a trader, don't trade the wins and losses, trade probability, right? What is the probability that I'll end the week out positive if every day I'm taking a 1 to 5 risk reward type trade, right? So the possibility of me ending positive for the week is very high, because every trade is a 1 to 2, 1 to 3, 1 to 4, 1 to 5 type trade. The odds are working in your favor. So I'm trading the odds of me winning and not necessarily one single trade, right? And so I posted that in the group to show people that I think it was on one account. I have a lot of different accounts. Some accounts are nice. It's like a 87% win rate and all that stuff. Ooh, that's great. They're not my biggest accounts. My more aggressive accounts that have like the 30% win rate is doing more than the accounts that are trading 87%. Why? Because the risk reward is greater. You know, the average risk reward. So if this one ends in a loss, then you trade the same idea. Is that oops, I didn't move that up. Did I move that up? Let me move this back down. I meant to grab this and move that up. Got to be careful what you click on. All right. And so we're trading the odds, not necessarily the trade. All right. We want the odds to be in our favor. All right. There. So let me show you this. So I'm trying to take this box, grab it, move it over. When I go to do that, this is what you got to be careful of. You hover over this box. You see this dot right here that I'm trying to grab. If I went to go grab it, this reversal button pops up. So in lieu of grabbing that, if I wasn't paying attention, I would click that and it would reverse me out of the position. All right, so it's something to be careful of. I'm going to scoot this over and then grab it and move that over. That's what I was trying to do, and not avoid hitting that reverse button. That's what I was talking about earlier. I just wanted to shorten up the box. All right, so yeah, we're trading the odds here. The odds of me winning or losing. Still, you know, if you can see the trade and it goes well in your favor, then great. That's great. But I kind of want to just trade this 1 to 4. I like that. And if I say, hey, you can make $2,400 and it costs you $500. And that's your risk. Oh, that would be great. Or I could say, hey, you can make $2,400, but it's going to cost you $2,400. You know, it's like that. Or I could say, hey, you can make $1,000, but it's going to cost you $1,500. All right, those are times where odds are not working in your favor. All right, you still want to make good trades. You still want to be accurate, but don't get too caught up as if that's going to make or break your account. Okay. So this one looks like it's we're going to retest. It looks like it's pushing higher. I would love to be on the buyer side only because look at this nice. Let me just move this out the way quickly. Look at this nice wick action here. See that long wick that this candle is engulfing. You have this long wick here, just on candle anatomy says that there's a lot of buying momentum in here in the market right now. So I kind of want to get out of this trade just based off of that. You know, I think we should, for the buyers, I think we should just get out for this candle. And I think we should look at the 9 o'clock or 10 o'clock candle to get out. All right, so this is retrace. I'm trying to wait till it retrace back to 0. It's going to cost me $100 to get out now. But let's do that. Let's get out of this at $150. Let's close the position. And this is on the hour. If I go to the 15-minute, you still get the exhaustion. 5-minute, we're kind of doing this accumulation thing where that shark fin divergence has turned really ugly, and this is moving up, which says that the buyers are coming in. All right, so we're $100 up. Let's get out while we're $100 up. Let's close the position. All right, so we just made $100 on that trade. Close the position, and as it comes down, didn't like the shark fin there on that. And so we're just going to wait for a little bit on this. We're going to let it prove itself out. Let it prove itself out. I still think it's coming down. We've hit the top, but let's let the candle prove itself out. Let's get a double top. Let's get a 15-minute candle closure. And if the 9 o'clock happens, then we can catch the 9 o'clock candle all the way down to here, right? But let's let it prove itself out for a little bit. Because then we'll have multiple 5-minute candles where it's not just going back up and down, but we'll have a breakout And then we'll have a reason on the 5 minute to come retest this area, or excuse me, on the hour, when the hour candle closed, to come retest this area and stay lower. That'll give us a lot more confidence to put in a heavy trade and go to bed, right? Whereas right now, we're just not sure. It could break above or it can go down. It's just going back and forth, right? It hasn't really moved. The 5 minute is moving sideways. So let's just wait. Let's just be patient on it. Let's let this hour wick itself out. Let's let this next, let's say we have a lot of wick action all the way down here. So let's see where price pulls up. Let's see if the next 9 o'clock candle opens up and stays lower. If that's the case, then yeah, we can put in the trade, the sell, and go to bed. Just let it ride down, because for the last 2 hours, we couldn't close above this level. So that's all the proof that I need is that for the last 2 hours. So this is hour one. This is that 7 o'clock. This is that 8 o'clock that close below. That 9 o'clock, let that 9 o'clock go. And once you see that red on the 9, let's just take that candle back down. All right, that's an easy way to say, yeah, I believe the sellers are in the market. Let's just let it prove itself out. There's no reason to keep going back and forth. Now, if we opened up that 8 o'clock and it immediately began to sell off, yeah, we'll stay in it. But right now we're just staying the same right now. So let's let it prove itself out. We don't have to work for it, and we don't have to wait through that back and forth movement. We'll just let it prove itself out. Now we made $100 on it. We can walk away from it. Yeah, because I don't have a bias. It's like, let go of your ego. I don't have a bias regarding the short. I am short bias, but we're so close here that we could break on top and come down. I think we did that Tuesday, didn't we? Yeah, Tuesday we did that. Yeah, this is Tuesday. So 7 o'clock was this long exhaustion wick right here. That 8 o'clock candle ran all the way up, right? And so I was looking for shorts here, but ended up, it was the 10 o'clock. It was the 10 o'clock candle that exhausted, got the choppiness and came back down, right? And so this is trillions of dollars that is influencing this market. My opinion is very limited when it comes to $1 trillion market, that I just want to ride the wave. And the wave right now is just standing still. We do have the exhaustion, but it's just standing still. All right. I put in the trade idea. I'm going to be looking for that on the next candle closure. I'm not going to spend a lot of time on this, but you could potentially see something like this. Very cheap sell down. Catch that 1 to 4. Right? If it breaks above, then great. If you were in buys up here, hold the buys and let it break the top and go up to that 27 mark, which I think was 40,040 was the number, right? As a possible target there. But we got out. We made $100. I'm fine with that. I'm going to catch the reversal on the 9 or 10 o'clock candle. Okay. We looked at that. Still like this. We're going to come back to it right before we close. But we're going to let those candles play out just a little bit. And then we're going to go look at the Treasury, U.S. Treasury note. I just want to look at Nikkei, or excuse me, NAS, NQ, which is touching that. This is exactly what I'm talking about. Got a lot going on. But I think this is a good example to look at from what we're talking about. All right, so bullish action. We came up to touch this top and wicked out. We couldn't close above it. We pushed back down, and then we came back up, right, to touch that right here. Got wick action, and so a lot of sellers were trying to push that down. And look what happened. That next candle opened up and it ran to take profit. right? So that is a possibility. And look how high we were on the TDI when that happened on the hour, right? So when you look at Nikkei, just have that in mind that we could, just because we're up high on the TDI doesn't mean that we can't run up and touch 40,040 area. All right, but it just doesn't look like we're, so we'll see. All right. Yeah, this is what you kind of want to see. Right now, you see that it's negative. Now, this is probably a good trade. This is probably one that I also should have looked at on that hour. Is old support turned resistance. Right here, this is that session, last day session close, which is the new open. We're trading below that, and then we have the shark fin that happened right at that retest, and that's the 7 o'clock candle. 8 o'clock candle opened up and retested that and stayed below, right? So that's what we want to see on Nikkei. Is we want to see the same thing. We want to see all right, we want to see that as it looks bullish when it gets up here, we want to see that next candle open up bearish like that. And then we want to see it break down and start to come down. Then we can enter in. After we see that we can't close above there, we can enter in around here. All of these candles can't close. And so I'm like, oh yeah, we can't close, we can come down. So that's what we want to see on Nikkei. We want to see a breakdown, and then we can start carrying that back down. All right. So that's what we want to look for here. All right. So we're just being patient with it. Let it play its game. You don't have to be a part of it. Just let it play with the game. Session open, not necessarily support resistance. It can act as just more of a bias. You really don't see it holding right there. You just want to see if it's trading above or below. Like if it starts breaking below, it can be a confluence to say, hey, we're trading above to support the buys, or we're trading below to support the lows. So I wouldn't necessarily call it support and resistance. All right, so now let's go over to Treasury, the U.S. Treasury. Yeah, this could really go either way. So I love waiting for the next candle. All right, 10-year Treasury note. Let's go to one of the things that I like to do is, and let me share my screen. I'm going to go to barchart.com. Let me share my screen. All right, we're on barchart.com. Go to futures. Go to futures market overview. All right, so here we can get the current contract that you should be trading on your futures. But one of the things that I use this for is two things I use this for. I can use this to get bias, and then I use it to get volume of what is trading. So right now, if you look at this volume that's in the market, the thing that has the highest volume is actually the October contract for sugar. Has the most volume in the market right now at this hour. Sugar has a lot of volume that's being traded. All right. The second thing is the 10-year Treasury note. The September contract has a lot of volume on it. And then outside of that, gold. No, excuse me, coffee. September contract on coffee. And then gold. All right. And so NAS is not doing anything. Well, I guess no, NAS is doing something. So it goes sugar, the T note, and let me enlarge this so you can see it. Sugar, the T note, and NAS, and then, or S&P, and then NAS, which 19,000 isn't a lot of value. Like usually we see these like at 100,000. So it's very low volume in tonight's market, which explains why price isn't really moving right now. You really want to see these in like the close to like above 50,000 is really where you want to see these. But usually you'll see them around 80, 90,000, 100,000. But 10-year Treasury note has a lot of volume pumping. So that first thing I look at. Second thing I look at is change. And so we see that S&P is trading, but we see that it's trading higher. So it's up 12.5 change. That tells you that price is moving up. So not only do you have volume, but it gives you the direction that the volume is going in. Right. So on the 10-year Treasury note, we have a lot of volume, and that volume currently is trading down. Right. So that's a quick way to see what's going on. For instance, gold. Gold has volume and it's trading down. All right. So now if you take that information and take it over to the chart, what you'll see is you'll see the 10-year Treasury note. It has a lot of volume and it's trading down. All right. You can see that in the chart. Right. So it's a great way to for you to see what's going on without having to examine the chart really fast. So bar chart is what we looked at. Gold said it had some volume and it's trading down. We could see that. NAS had a lot of volume and it's trading up. Oh, we could see that. S&P had a lot of volume and it's trading up. Oh, yeah, we could see that. All right. So barchart.com is a great confluence to go. So let's look at US Treasury, which has great structure. It's trading below the session close. Last day session close is trading below that. It's bearish and it has significant levels. So when you go we're on the hour, when you go down to the lower time frames on this, what you'll see is that it has specific ranges that it will trade in. Like you really don't have to guess on these ranges. So when you look left, you can see that the wicks aren't going to really be there. It's going to be, hey, this is the top of the range. This is the bottom of the range. This is the top of the range. This is the bottom of the range. And so you can start to drag that over because it's going to be the same, where you're going to have bottom of ranges that occur or top of ranges that occur. Look how it hits that range perfectly, where, hey, it identifies, say, hey, look at me. This is the top of the range. You're going to have constant spikes there. And this is the top of the range. You bring that over. Look, it's okay. Top of range. We broke out of that, went to this one. Where did we hit? Top of range. All right. Where are we going to go from here? And it gives you those ranges. So it's either going to be here or it's either going to be here. Right. If it breaks this, where does it go? Well, these are the ranges. So it gives you some very solid ranges. That's not a lot of wicking action going back and forth. It either going to go here or there, one way or another, right? And so that's what I like about the U.S. Or the 10-year Treasury note. But it's also one of those things where you have to have a lot of patience with it, because looking at the ranges, it's going to move kind of slower. But predictable. It moves slow but predictable, right? In its range patterns as it moves. And so you could take, let's say, like right now we know that volume's going down, but let's just say it went to the bottom of the range. Like it's very simple to say, like, okay, my stop loss can be very tight, and then to take it up. So if I'm looking for like a 1 to 5 and I know direction, that's a very simple thing that I can have a very tight stop loss and I know that it'll go to the top of the range, or vice versa. If it's going down, I know I can mark out those ranges on here, go down to the 1 minute. I can mark out these type of ranges, and they're very accurate as far as, you know, what they are going to do. Don't really have to guess a lot on these ranges. and catch it from one range to another. So that's really U.S. That's really the U.S. Treasury note. I was looking at this. I mean, if you like slow markets or you want to learn, that's an interesting pair that always has a lot of volume. What news impacts the 10-year note? Trying to figure out where the spikes are coming from. Well, overall, what's being traded here is the central bank is trading the Treasury note. So this is issued from U.S. Treasury, right? And so the 10-year is very significant, as well as the 2-year. So it's called the yield curve. The two and 10. So 2 represents the short term, 10 represents the long term for economies. It's the way that we weigh the economy. And if the 10-year yield curve is higher than the 2-year, then the future looks bright. If the 10-year interest rate is lower than the 2-year, interest looks it's a signal of recession. And so this is an economic indicator. It's an actual how the governments trade. And so when you think about the strength of the economy or how the economy is doing, you're looking at Treasury notes, long-term Treasury notes. And so what moves this is just bias on how the future is looking. So any economic indicator for the dollar is kind of the same way that you're going to look at the Treasury note. Any kind of news that affects the dollar is going to affect the Treasury note. Central banks, this is a very solid, Treasury notes are a very solid, a T-note is a very solid investment for governments. So you see a lot of central banks trading the Treasury notes. And that's the reason why it has a lot of volume all the time that flows within this market. You'll see that if the economy gets unstable, people run to gold. Well, a lot of retirees and different things will run to Treasury notes. And so the things that push up gold and different things like that will also push up the Treasury note. And I haven't done this yet, but let's do this. Let's overlay a gold just to see what gold is doing versus what the Treasury note is doing. Good question, though. Let's just put it in a continuous chart. Let's do that. All right. So you kind of can see this is gold right here. You can kind of see that they're following the same pattern. Like as a safe haven, when the market is kind of shaky, people are going into Treasury notes the same way they go into gold. So you see this, it doesn't go to the proportion, but you can see when gold is ticking up, Treasury note is ticking up. When gold is ticking down, Treasury note is ticking down. So that's kind of interesting that it kind of has the same trajectory as gold does. All right, we got some charting tied in today, everybody. Good job, good job. Let's check back in on Nikkei real quick before we go. I can see right now it's still at 0.45%, so we haven't broken above yet. And we have the new candle that is now just opening up. The new hour candle is just opening up. All right, so we haven't cracked up above this yet. 8 o'clock didn't, 7 o'clock didn't, 8 o'clock didn't. And now we have a new candle that just opened up. And so that this will be something to watch, is that we have, let's just look at this really quick. Put a horizontal line on this. We did crack the armor. We came and spiked up above it, tried to penetrate it and put in a new high, but we couldn't close above it, which is the most important thing, is that we haven't closed above it yet, right? And so we're still in that unknown area right now, where this is the cheap buy. Will it? And we're getting ready to jump off, everybody. This has been a good segment. and great charting time. But we're just seeing this. We haven't went anywhere. We're moving sideways, so we're going to be patient. We're going to see if the 9 o'clock is able to push up above. Right now, we got the initial crack in the armor. We'll see if this 9 o'clock pushes above. All right, so it may be a 10 o'clock, maybe 11 o'clock. It's a no trade for me. Made $100 on it, which is fine. We got out, but we like it. We like it. I'm still looking at the sale. Like, look at that. It's just that exhaustion candle. We went up there, tested it once, but we're gonna see if this 9 o'clock goes up. If we get exhaustion on the 9 o'clock, I may wait up till 10 to take this sale. All right, so let's just see on that one. But yeah, great charting session tonight. Let's keep doing this. Let's keep sharpening our eye. Just imagine if we do this for the rest of the year, how sharp we're going to be in these evening markets and how profitable we're going to be. All right, everybody, have a good night. Good charting session. Way to put in the time, way to put in the work. Great questions tonight. And thank you for showing up. We will be back live Monday morning. We got Friday off, so Monday morning we'll be back live on the chart, and we will go from there. All right, everybody, have a good night. God bless.